Guys, I messed up. I sold my Dogecoin way too soon. But I don't feel like an idiot because I'm willing to admit when I'm wrong, and if something still has strength after I sell it, I'm okay buying back in as long as I can still sell a profit. And that is exactly what I did with Dogecoin. So it had a nice rip through 20, and I think went as high as 28 and then dipped all the way down to 23. So I rebought it on that dip and was trying to sell it at 35. But Robinhood decided to shut everything down and not let anyone sell. So I ended up locking in some gains at 28.9. And then there's just been a lot of great dip buys since then. So I kind of want to talk about the dip buys in this portion. But I also want to talk about the fact that although I was early, I was not wrong about Dogecoin because it went as high as 48 cents on Robinhood. And immediately thereafter, it pulled back from 48 cents to 28 cents. So if you believe in Dogecoin a lot, and you want to have as many Dogecoin as possible, it still makes sense to sell some in, to sell some and lock some of your profits in when it's spiking exponentially so that you can buy some back at a lower price. Because this way, you're gonna be able to have more Dogecoin overall. You take that same money you sold up here and you buy, I don't know what, 60% more Dogecoin than you had before, which to me seems like a pretty cool idea. And I know it's impossible to time the top perfectly, but if you sell when something starts going ridiculously exponential, like literally straight up, it always comes straight back down. So even if you don't sell perfectly at the top, it will be back under where you sold it. And I think my biggest mistake in selling my Dogecoin too early was I didn't wait for it to go exponentially up. I sold it when it was, it was going up, but it wasn't exponential. And I think, that's my mistake. And that's my takeaway for the future is to wait until something gets absolutely exponential before I start locking in those gains, at least until I sell all of it. I could have partial sold at 20 and waited to sell the rest until, 35, except I guess Robinhood would not have let me. But hopefully this is helpful for you guys. And I just wanted to make this video to talk about the fact that locking in gains is always a good thing. If you're up multi-100% on position on something that, let me pull it up real quick, that is up 3,929% in the last 3 months. Let me say that again, 3,924% in the last 3 months. That's pretty insane. That's pretty insane. It's up a lot, guys. It's up a lot. Now, I'm not here to say that it can't break 50 cents in the next day or over the weekend, but what I am here to say is that whatever it does, when it goes exponential and goes straight up, it will come straight back down. So if you lock in some gains at the top, you're gonna be better off and you can buy back more at the bottom if you believe that long term it's going over $1. And I really think it could. I think it could go over $1 long term, but you guys just gotta lock in some profits, man. You gotta do it. And that's pretty much the point of this video. So I wanna dive in a little bit and show you guys how I nail these dip buys and what it looks like, because nailing dip buys is something I've literally made a living doing. There's less opportunities now in the stock market for nailing dip buys, but back in February, I was making some days $10,000 or more in just a few hours of trading. And the majority of that, normally came from one great trade where I dip bought with big size after a huge panic, and it immediately bounced. And it's the same concept when you're selling into a big spike and then it comes back down. So when you see a panic on Dogecoin, buy that panic. That's great. Dip buy provides support for something you do believe in, and then it's gonna bounce. It always bounces. Now, it might not bounce as high as it was before, so it could be the backside of the move temporarily. So keep that in mind and always lock those gains in when you have them. At least sell some. That's all I ask, because people always in hysteria underestimate how far something can fall down. And when something is up, 3,000% or more, when you sell even 25% of your position, even 10% of your position, if it drops back down from 3,000% up to 500% up, that 10% you sold before is gonna be worth just as much as the remainder of your portfolio if you keep holding, which is pretty wild. So if Dogecoin spikes to 50 cents and then immediately pulls back down to 25 cents, if you sold half your portfolio at 50, it would be worth your entire portfolio at 25, which is just some perspective, guys. So whenever something goes exponential, just lock it in. That's all I wanted to make this video to say. So I'm gonna dive in my computer real quick just to talk about some of these dip buys and how I do technical analysis on Dogecoin, because it's not a stock, but technical analysis still works really, really well. So let's do it. All right, guys, so I'm here on my laptop, and this is the chart for Doge. And just by looking at it, where do you guys think would be the best opportunity on this chart to buy? The answer should be pretty easy, and it's right here at the bottom of this dip. Now, here's the thing. If you just look at this chart, you might not know where it's going to bounce, and you're probably thinking, David, how do you time that perfectly? You can't do that unless you already know when it's going to bounce. Hindsight's 20/20, but there's no way to time that perfectly. And you'd be right. There's no way to perfectly time the bottom. But if you wait for the first green candle, typically speaking, that's a pretty safe entry after a huge sell-off like this. And worst case scenario, you can cut right here and you don't really lose too much, even if it's a huge sell-off. Now, here's the thing. This applies on a lot of different time cycles. And there's just a few ways that I like to trade. Now, you can see here, this is what I was talking about. It got as high as 48.5 cents right here. I guess 48.7 cents right here. And then immediately after that, went and dumped as low as, what is that, 31? Yeah, it dumped as low as 31.94 cents. So that's a pretty big dump right there. And that's just within, 15, 20 minutes. So if you wait to buy until right here, and then you dip buy, you can sell it at 45 within 10 minutes. And for me, I think it comes down to patience, guys. I think it ultimately comes down to patience because there's a couple things that you want to look for when you're trading these charts. When you get huge green candles, you want to sell into those because eventually it comes back down and you can dip buy into a bunch of huge red candles and you're just going to be more profitable overall. And for some of you guys who can't buy and sell this much, I totally understand. I totally understand. If you want to hold this as a long-term investment, whether you think it's a meme, whether you think it's the greatest thing ever, and you just want to see where it goes, okay, that's totally fine. I understand that. But for me, as someone who's actively doing this, I think it makes sense to try to lock some gains in when it's pretty obvious that a big tank is coming. Same thing, always. You get a bunch of green candles, you get some nice red candles. You get a bunch of green candles, you get some nice red candles. Bunch of green candles, some nice red candles. Bunch of green candles, nice red candles. Green candles, red candles. And that's just how it works. That's how human emotion works. So when you have people, fear and greed are always going to be a part of the equation. And that's why charts look pretty much the same no matter what industry it's in, whether it's cryptocurrency, whether it's stocks, whether it's, I don't even know, futures or whatever. I mean, everything looks pretty much the same, guys. Everything looks pretty much the same. And in this case right here, we are in a nice wedge. You could call it a bull flag, you can call it a descending triangle, whatever you want to call it. But you can see it's making lower highs and it's making higher lows. And the most important thing here is waiting until it makes a higher high and then getting in, which is right about now. So I may actually have to leave and go see what happens. But typically speaking, when you get a stock or a cryptocurrency that breaks out past the all-time highs, it sees a nice little pop before it pulls back. And guys, this happens with Dogecoin over and over and over. You can see here, spike, consolidation, does the same type of wedge action. And then when it breaks those highs, it goes on a crazy run. Spike, consolidation. When it breaks those highs, it goes on a crazy run. Right now, we're in the spike, consolidation, and we got to see if it can break those highs. Now, right here, we're getting some nice red candles. So, personally, I think this is starting to be a good dip buy. Now, could it dip further? Yeah, so maybe I'll wait on this one. Maybe this is not as high an odd setup as if it completely rejects, but you can see, it's starting to pop back up right now. So, these are just the things you look for, guys. If I see, I don't even know how many that is, 5, 6, 7 red candles in a row that are pretty big, I get excited because I know it's extremely likely that if I buy it, I'm instantly going to be profitable on my position. And look at that. If you bought there, you would have made money. I mean, it's already bouncing really nicely. So this was a great example. I mean, this happened live. I had no idea, but I mean, it's pretty cool. Now, for me, I might have actually waited on this one. I might have waited because I think if it rejects the breakout level, it might dip a little bit more. But this is just basic technical analysis, guys, and it's a really helpful tool to have because you can see here, it made a higher high here. It made a higher high here. It broke that. So the next thing it has to do is break this high here at 44. And then the next thing is going to be breaking this high, which is coming in right towards 50. There's going to be a wall of sellers at 50. But if it breaks out past that, the sky's the limit. This thing could easily run to 55, 60, 65, 70, 75. I could see it. I could definitely see it. So that's a smart way to trade it. But if it ever goes straight up, I just recommend locking in some gains. And maybe you don't want to be an active trader like I am. I am a day trader. That's my profession. So that is in my nature to want to time the chart perfectly, because I know that you can, by timing it, even if you don't time it perfectly, you can make more money than if you just buy and hold. And I know a lot of people don't think that. They think it's impossible to time it perfectly. And they'd be right, because you can't time it perfectly. But again, all these dips, I'm making money on all these dips. Someone who's just holding, they didn't sell here. Maybe they bought here. And now they're, whatever on their position, negative. But if you buy on the dips, sell on the spikes, buy on the dips, sell on the spikes, up and down and up and down and up and down, there's so much opportunity to make money versus if you're just holding up and down and up and down. It doesn't help you at all. It doesn't help you at all. So that's pretty much the takeaway from this video, guys. I'm pretty much saying the same thing. Lock in some gains. It will pull back at some point. And I don't think we've seen the huge pullback, but I don't know when we'll get that. I have no idea when that'll come. Maybe it'll get to $1 before it sees any type of real pullback, because it's still making higher highs and higher lows every single time. It's still consolidating and making higher highs and higher lows. Eventually, it'll break down below the previous level. It will happen eventually. Nothing goes straight up forever. So I just want you guys to be prepared for it and to get the best price for what you're doing. Now, this doesn't even update this 3-month chart, because, it went as high as off the screen. That's one big green candle, guys. That's a big green candle, and you want to start locking some in. It's crazy how much it's been up. It's crazy, and it's awesome. I love it. I love this type of volatility. There's so much opportunity for profit, but I just want to see you guys, make as much money as possible. And I hate to see bag holders. I hate to see people who, God forbid, buy, after all these green candles, give into FOMO, thinking it's going to rip right through 50. And then suddenly they're down, almost 50% of their position, down at 28. I hate to see that. I really do. So I'm not sure what it's going to do. I'm not here to try to predict it, but all I ask is that you lock in some gains. That's the takeaway from this. And if you want to buy breakouts, go for it, man. It works really well. Just be prepared to lock it in when it starts going the other direction. So that's pretty much it for this video, guys. Hopefully you found it interesting. Hopefully I can get under a 50% like ratio on this one again, because people will still be upset from my last one. We'll see if I can manage it. If you made it to the end and you are not a hater, well, I appreciate you. If you are a hater, please give this video a nice little dislike so we can get to that 50% ratio. Not sure if we'll manage it this time, but we will see. I'll see you guys in the next one, regardless. Until then, you know the drill. Let's grow better together. Preguntar, bebé, dime por qué te mientes. No puedes esconder todo lo que tú